Hey Justin, how's it going?
Hey, Ram, I'm doing well. How are you today?
Good. It's springtime. I went out to get a quick bite and the weather was absolutely gorgeous. It was
Yeah,
just
it is. It
amazing.
is beautiful. It is tax day too, though.
It's tax day. Tax day is bullish. The day before tax day is bearish.
That's
Happened
true.
quite often, happened again this year.
I'm a bigger fan of today being Jackie Robinson Day than tax day. And I'm rocking my game worn Jackie Robinson Day hat here.
Oh wow. You got that. Is that at
So
the
this
Guilder? Yeah.
this
House is
was
nice.
worn by one of the Nats players a few years
So it's
ago.
actually a collector's item. It's not just a hat.
Yeah, I guess it is a collector's item technically, but
Okay.
I'm wearing it and not worried about its resale value. But it was worn by Anthony Rendon, who used to play third base for the Nats. He's now on the Los Angeles Angels, and he wore it on Jackie Robinson Day, which is every April 15th, and all Major League Baseball teams celebrated, and everybody wears number 42 in honor of Jackie Robinson, and every uh, hat has a patch. So it's every year tax day. So
Very
if you don't
cool.
like paying taxes, you can just think about Jackie Robinson instead.
Well, the other tax day is like how many days have to go by before you've earned enough to pay your taxes? Two different
Yes.
days. Yeah, Jackie Robinson's a hero, obviously, breaking into Major League baseball, and it's great. We like to honor heroes. But we got a lot
Absolutely.
to do, right? We got Apple versus Samsung, league tables, Iran Israel conflict, Bitcoin halving. We got some highlights from the Lumina Ledger. You interviewed someone on sleep expert last week.
That's
So
right.
there's China
So it's always
data.
China.
It's always China. So where should we begin?
Well, let's start at the lightest, I would say, because some of the topics could go heavier. Bitcoin halving. I
Yep,
am not as interested in the fundamentals on a personal level,
sure.
but I'm interested because we learned when we were last in Puerto Rico about rare Satoshis, rare
Oh,
sats.
yeah. So
And there
funny.
will be an epic sat at
Right.
this halving because the first Satoshi of the first block mined after the halving is predicted to be worth millions of dollars in the resale market now that Ordinals allows individual sats to be kind of traded like an NFT or a collectible.
Great framing and setup. I don't think people really appreciate this. So the idea behind Bitcoin is that it's fungible. You can buy small denominations like sats, but there are actually special Bitcoin based on the date that they were mined, to your point. So like the Genesis block is a special Bitcoin and it's worth more than other Bitcoin. And there are markets to buy and sell the special Bitcoin. And there's a
That's
race,
right.
to your point, to mine the Bitcoin that will be immediately on or after the halving. I think it's just fascinating. See that
It
it's
really
collectible,
is.
right?
Yeah. I mean, if you think back, I mean, there's a great book, Liar's Poker, which is an old Michael Lewis book where there's gambling about the numbers on bills, right? Like, oh, I
Right.
have one, two, three, fours, whatever. And that's the only way you could differentiate a given dollar bill, right? Money is fungible, but there is a stamped set of numbers on it. Much in a similar way with the rare sats, right? Bitcoin should be fungible. It
Right.
is fungible, yet there is this technological mark that indicates whether that sat that is it 1/1 millionth of a Bitcoin is a Satoshi. I always get
Uh,
this
is
division
that the right?
wrong.
We'll look it up. But the
Look it up. But
it's
that's
conceptually similar to like a $2 bill. A $2 bill is worth $2, but people collect them. I don't know if anyone pays more than $2 for a $2 bill, but in the case of like that special Bitcoin, people pay far more than
yes.
the quote face value of the Bitcoin.
That's right.
Uh,
And this is the first SAT since Ordinal's launch that will be this first SAT at the halving, right? So it's the first every 4 years it halves, and this will be the first epic Satoshi.
Right. Pretty wild. I think, by the way, the ratio for SAT is it's 100 million to 1. That makes sense.
100,
100 million to 1. So there you go. Trivia night. So I post this article about the halving or the halvening, depending on how you want to pronounce this. I kind of like the halvening. It sounds has more gravitas to it. Sounds like a real event. Doesn't sound like you're cutting a loaf of bread. So the halvening has more meat to it. Here we go. So check this out. There's $2 billion in short bets on Bitcoin miners. And what I know here is that I'm simplifying a lot here, but in general, you think about it as like the cost of manufacturing and mining the next Bitcoin roughly doubles because the hash rate requirement doubles. All that's encoded in the algorithm. And so you can expect revenue to be cut in half. And the folks that have the best technology and equipment will outperform. So it's a power law game. The folks that have the best technology will do well, and the folks that have weak technology, a lower hash rate, will not. And they'll likely get consolidated, go out of business because they have obsolete technology. So you can see the bets against these firms on the screen here. Marathon Digital, $900 million, CleanSpark, Riot, and then it declines. And so take a look now at I have a watch list here. I'm going to share this tab covering different miners and all the rest. So you can see the miners as a bucket. Let's see, these are not all the miners. I say I got some up there, down there. Okay, there we go. So by and large, the miners are down 10 to 26% over the last week, and 11 to 36% over the last month, although some are up. And the ones that are performing better, the market perceives as having better technology. Okay, so take a look at Mara, which is the one that has the most short interest now. So by the way, we have no positions in any of these, and I'll come back to why in a moment. I call these battleground stocks, and I don't like waging in warfare with battleground stocks. They're easier things to do in life. So here's Mara, and you can see it just touched down to the 200-day moving average, and had been at $31, and now Mara has had its own halving. Mara has halved since its most recent peak. You had that peak volume up day here on February 28th. That was around more recent peak in Bitcoin prices too. These are correlated. Sometimes I think of these as like call options on Bitcoin. Yeah. So really fascinating to watch what plays out there. Mara's down 3% today. It's got an 8.2 forward PE ratio, which on the one hand, you might think of it as cheap. On the other hand, earnings is going to decline, presumably.
That's right.
So that's that on the miners. Pretty big event. Generally, if you were to plot the price of Bitcoin over the halvening, you don't see like a moment on the chart that you can identify some technical feature. But generally, these are bullish. Usually, all-time highs happen after the halvening. This cycle, we had all-time highs happen before the halvening. Prices dropped, and one might expect that we'll see all-time highs after the halvening here. So you can see CLSK is up 4% today. This is a miner that has better technology. It's outperforming. So there's a lot in miner dynamic, and there are people that specialize just in miners, the technology. Some miners don't have debt. Other miners do have debt. A lot of dynamics around that. It's also one of the most telegraphed changes in the market. Everyone sees it coming. All the miners see it coming. They also know their debt position. They've been trying to refi by issuing new stock to pay off debt when they're at their highs. It's a really fascinating market in terms of like the technicals, the fundamentals, the hash rate, the raw competition taking place amongst these firms.
Yeah. And big pullback this weekend in Bitcoin pricing too. With Iran attacking Israel as the cause of that pullback.
Well, the funny thing about that was another telegraphed move, right? So Iran had been projecting for like days, like, hey, we're going to lob rockets. I'm sure they use some more incendiary language than that at Israel. So markets tanked Friday, right? JP Morgan had its largest down day in many, many years, like 6% plus, unreasonable earnings. And, stock market tanked. On Saturday, I posted a note on Twitter when crypto prices were dropping. I said, this is the dip you're supposed to buy, but you're not going to buy. But, crypto assets trade 24/7, so you can see macro pricing impacting those assets. And that's what happened here. And Bitcoin is flat as we flat to up 400 points, 64,200 ish. So it's recovering from that dip that we saw 2 days ago. But one of the things that we shared in the Lumina Ledger, this is our newsletter that goes out every Sunday at 11 a.m. Eastern, is what the impact of geopolitical risk is on stock prices.
Yeah, you had a good write up there. It was an interesting. It was interesting to see the recovery in things like the Israeli stock market following the atrocities that occurred at the start of October, because stocks really did rally. It'd be interesting to hear you go a little deeper on that.
Yeah, let me pull this up here. So here's our newsletter. Here's a visual of it. But there are a few charts. My friend Stephen McBride from Risk Hedge shared this chart, which I like. And this shows the average of the S&P movement around these major geopolitical events. 0 marks the date of the event. Before 0 is the average change in price in the S&P 500 before all such events. And then afterward shows the average change in the S&P 500 after such events. So what you see here is there's some temporary dislocation measured in weeks. There might be a relief rally and then some kind of retest. Obviously, this is looking across all manner of geopolitical events, including 9/11, Iraq, Kuwait invasion, etc. So there's a lot that's being lumped in here. And this, so far, I mean, we're already bouncing. This is not does not appear to be a major expansion of hostility and conflict. One of the comments that came out of Israel was, quote, we will respond at a time and place of our choosing. That's an interesting way to not escalate, but save face. And in my estimation, I think all these parties are just attempting to save face. There's no interest that any party has to escalate here. Israel's got its hands full. The United States is influencing that and stepped in over the weekend. And you can bet that subsidy program to Israel will be influenced by Israel's behavior too. So I think it's like the buy the dip happens. And again, to your point, we saw that on October 7th, Israel had about the EIS ETF dip for about 3 to 4 weeks. That was a buy. Then it was back to all-time highs, and it was the best performer in the month of November. So don't panic and don't sell is a message for anyone that's listening.
It's always hard to predict geopolitical events, and always hard to predict what happens in the Middle East. I'm concerned, certainly, but understand that there is a lot of support for de-escalation. I certainly don't see it de-escalating, unfortunately, given kind of like a proxy war has now turned into a bit of a more direct, overt conflict. And
right.
I don't think there's much room for negotiation.
We'll see what happens. This is the first time you've had a country like Iran volley rockets into Israel. So that's more on your side of the ledger there. I'll share briefly this chart too. So this is October 7th is this date here. You see that big red candle. EIS takes a major dip. It drops through the end of the month. October 26th was the bottom of the October correction. It also bottoms around there. And then V-shaped recovery. By the second week in November, you're back to flat. And then, as I mentioned, November, that ETF had the best country return out of other ETFs and then continued to soar to all-time highs. More recently, it's dipped, had that red climax bar here. You can see on the right-hand side. So we'll see. Let's do a quick check-in on how EIS, this ETF, is doing. So it's up today.
Yeah. Interesting to hear the phrase V-shaped recovery again. I remember from the start of COVID, there was the debate, is it going to be a U-shaped or a V-shaped recovery? So
yeah, these V-shapes happen often at these capitulation lows, and they are quite symmetrical, kind of uncanny, and sometimes faster. I mean, here that melt up took place at a faster rate than the melt down. So far, markets are reacting positively. Futures are up. So markets aren't really concerned right now. Friday was, you can see EIS led the market down though. So we had that sharp down day on Friday, but this was a market tell. So Friday's here, Thursday, Wednesday. If you were looking at Wednesday, you might have said, gee, something's amiss. And maybe that would cause you to approach, risk differently. But here we are. We'll see what happens as it gets closer to that range. But quite interesting to see all that play out over the weekend.
From a stock market perspective.
Yes, from a stock market perspective, just from a stock market perspective. And also, like, technically, the idea that we can shoot a rocket at another rocket moving at hundreds of miles per hour and like hit it is an amazing act. We just got to get the rockets to point upwards in space to like the moon and Mars, not at each other. That would be the next level up in human civilization. We have good science, just not good objectives right now.
Yeah, even better if we could just reduce the number of rockets that exist in the world. You think about like the level of nuclear weapons, and we don't talk about it much. And I'm not certainly trying to go too dark or deep on this area, but when the Ukraine war kind of got into a slog and Putin started talking about tactical nuclear weapons, these things would change the dynamic drastically if any country were to make those moves. So you do hope that de-escalation prevails in moments of intense challenge where it takes a lot of bravery to make the first move towards de-escalation. It's much easier to retaliate. It feels good. Anger feels good. It's easy to access anger and frustration. It's much harder to go the levels deeper and realize that there's a lot more at risk.
I think these actors are more rational than might seem on the surface. The funny thing is, there was an article I saw earlier where it said, this from Iran, and they said, we're crazier than you might think. Think about that. It's rational to say that.
It's true.
It's rational to be perceived as crazy. It gives you bargaining leverage. I mean, Trump has pulled that strategy for negotiation. This person's crazy. We don't know what they're going to do, right? So
unpredictability is a strategy.
Unpredictability is a strategy, right? So let's shift gears to something a little bit more positive here. We've got Apple, somewhat more positive, depending on how you look at it, versus Samsung. So I'm going to share my screen again here. Leaderboard change. And what the headline here is that Apple iPhone shipments fell 10% in Q1 2024. Worse than analyst predictions. There's so many analyst predictions for Apple that just keep getting missed on the downside. I'm waiting for that to stop happening. That still hasn't been fully recalibrated yet. And you can see Samsung has now 20.8% market share of the smartphone market. And Xiaomi, which is a China brand, is gaining. So I had this podcast interview with a portfolio manager who's got like a dozen analysts on the ground in China. And one of the main points he was sharing is that you're going to see a growth in China domestic brands. So of course, people know Luckin Coffee, which is their version of Starbucks, right? So Xiaomi is another. There's their version of cars, everything from Rolls-Royce, Porsche level luxury down to the $10,000 vehicle from like a BYD. This is signs of that, though. You're seeing these local brands take share. And the other part is both Samsung and Xiaomi are built on the Android Google platform.
That's right. Yeah, that open platform has given a lot of opportunity for whether that's new hardware innovation or whether it's a chipping away at the Apple monopoly of the iOS store.
Exactly. Samsung is also one of the 3 players that leads in hardware-based memory. They're not the best at it, but they're not the worst. Alongside Micron, there's another South Korean company that's like the best. Unfortunately, there are no ADRs for Samsung or SK Hynix, which is the South Korean HBM manufacturer, the hardware-based memory player.
So do you know where this growth is? Do you know if this is growth from the domestic China market or from other regions of the world? Because I think it's interesting. It will be interesting to know, China has set off on a long, what do they call it? It's the Belt and Road. And, they've poured investments into a variety of other countries and continents, Africa, South America, places like that, where they're expanding their geographic influence through investment dollars. And it would be interesting to see if now Chinese brands like that, from a consumer perspective, are they following? Are they part of this? I don't know.
Well, this is the message that Janet Yellen was sharing with her counterparts in China. Her point was, hey, look, stop doing subsidies and dumping and start investing in your domestic consumption. I actually don't know that I agree with her on the dumping, because all that is just a rebate or discount to American consumers. If they want to sell us cheaper products, that actually helps combat inflation locally. We all benefited from the 2 or 3 decade rise in globalization, which allowed the exporting of deflation. So in the same way, we all benefited from enabling Detroit auto manufacturers to compete on a global scale, on a global stage, and American consumers benefited from having competition of products and services. But her
You're
message,
suggesting that the federal government may be more interested in protecting big business than consumers?
can you believe it? Right.
Shocked.
Exactly. Right. I mean, it's not like they're subsidizing like car. We don't even have Chinese brands selling cars in the U.S. yet.
They've never cracked. They've tried.
They have tried. Okay, so we haven't seen success yet. But so take a look at this. This is share this tab. All right, China. So here's the latest on China. 1, industrial production strong rebound. So big bump in March. And the electrical figures support that. The reason why that matters is, you got to be a little bit suspicious, maybe more than a little bit suspicious about the quality of the data coming out of China. But here you have the power generation supports industrial production. But the home sales, which is ground zero for China's woes, again, property, namely single family property like condos, is the primary CV's vehicle for China citizens. That is still declining. Okay. Not as bad as a 2008 crisis, by the way. People think it is. I think it's good to look at the 08 crisis from a market perspective and overlay it, but China is actually not as bad as the 08 crisis. They have deflation that they're seeing here, and lack of credit growth. That's definitely on the negative side of the ledger, both this and the deflation. Hard to see earnings growth with those two in place, and the labor market remains weak. So mixed data, but it's not all awful. Industrial production is growing. There are in the cars they're manufacturing, the solar technology they have is credible. It's significant. They made strategic bets on those categories and made a strategic bet on semiconductors as well, right? There are more startups in China doing semiconductors than anywhere else in the world, and dollar funding, even though they're behind where Taiwan is and the United States is. So that is China. My quick view is I don't think China is an overweight or even like a market weight, yeah, it does have diversification versus any other region of the world. It just behaves differently than any other market. So it's got real diversification. My view is that it's probably range bound. I think they need to build a base, and that could take place over the next couple of months or through year end. And
go back to the Apple versus Samsung for a second, though, to kind of like tie a bow on this conversation. You mentioned something about analysts continually missing perhaps the signals that Apple is in a state of decline.
Right.
And it would be interesting to get your take on why that is. I have some theories, but they're, I'm sure, less sophisticated and nuanced
than
yours.
First off, analysts by and large are wrong. That's one. There's a wonderful book called Contrarian Investment Strategies. I recommend folks take a look at that. So they're especially wrong at turning points. Like Gateway Computer was a leading player in the dot-com era. Gateway's not around anymore. I think the second one is Apple is a consensus name where no one actually had to think about their view on Apple. You got to figure out where am I going to place my focus and attention and update my view. And usually that's where the novelty is. Just as a human being, we focus on what the novelty is. We look for the change in the color or the shadow or some motion. That's literally how we're wired. And Apple been going up and to the right forever, seemingly, I don't know, 10 years or so, whatever, right? So no one's focused on that. I mean, there's so many people that just kept saying, oh, well, it's safe as a money market fund. Even like 2 months ago, I was talking to people that, well, no, it's Apple. It's a great business. Like, it is a great business. Yes. And they got the lock-in. And yes, the products are good, I would say. I don't know if that's a motivation to upgrade the iPhone. You know, Samsung actually has better AI capability and the Android. Actually, I was at this viewing party for the Masters. Quick digression. We'll bubble back out to your question there. And the individual next to me, he showed me the Samsung. He's like, look, here's a photo I took. He had a family trip, and he cropped out someone in the background, and it took all over 1 second. And he's using Google software on the Android platform. I cannot do that on my iPhone.
Yeah.
And his whole family's on the iPhone. I said, don't you feel that you're excluded from that? So first he said, well, like, I think different than most. He's kind of like a contrarian. And second, he said, no, not really. Like, I'm still part of the group message. He can tolerate that. So I think that's why, you know, analysts also underestimate changes, both on the upside and the downside, right? Like Google has $1,000 price target on NVIDIA. So NVIDIA, let's go take a look at the price of NVIDIA now, but they're likely forecasting a single-digit price growth in NVIDIA between now and year end. So NVIDIA is at $880. So
yeah, there's an interesting point that you made there that resonates with me. I had a board member / mentor who was a tremendous ops leader, and she said something one time to me that I think is apropos of this analysts looking at Apple. She said nobody notices flashing green lights. You know, like when you have you know, a fasting. Sorry, I'm home and I have my kids home, unfortunately, on a sick day. I'm hearing it. So, but nobody looks at flashing green lights, which is true.
Yeah, no, I think that to the extent they do, they get some kind of deer in the headlights, so they don't know how to process it, and they wait for others to develop a point of view that they respect. There's an information diffusion, like a belief diffusion process. It's an article, academic paper I read, I don't know, 8 or 10 years ago, and it looked at the views that portfolio managers have based on their schools that they went to. And it turns out they're correlated. So if you go to Harvard Business School, your views on stocks are correlated with your classmates. And they're information networks. And it makes sense because investing is social. And
that's really interesting.
Look for leadership in developing a view.
Mhm.
And the process of going from consensus to non-consensus back to consensus, it takes place over hundreds of thousands of conversations punctuated with news articles and earnings releases. And this, during that progression, people are trying to interpret. They have a view like, oh, is this like a one-off? Oh, it's just a bad quarter. Let me dismiss that information. Oh, no. Maybe this is actually fundamental change. Let me prioritize it. And I think all those biases that Daniel Kahneman talked about, which he won the Nobel Prize for, kick in.
Right. Yeah, it's interesting to think about those information networks and also what level of faith or willingness to believe you will put in the opinion of somebody. And so those information networks also have that factor of you're more willing to believe somebody that is within your network. That's an interesting.
People cannot help but be influenced by the information that they interact with and consume, especially if they like or trust a person. They cannot help it. It's psychological.
Marketing and influencer marketing, right?
Right. And it's a difficult bias to manage and control because no one has enough time to process information. Oh, we need shortcuts. We need heuristics. Right. So that creates these inefficiencies. So let's take a look. So Samsung, Apple, you can see the reasons for the Apple slump, weak sales in China. It's been a common theme for a lot of retailers with exposure to China, like Nike, for example. Lululemon, same thing. Exposure to China consumer, not good. If that's your growth market, not good. Those stocks have been punished. And the Android market expected to grow faster than Apple. Consumers holding out on their phones longer than ever. Makes sense.
Yeah, so, phones are incredible. So it's hard to justify an upgrade. It's gotten so good. That's why you need new products.
So at this viewing party, I was there this weekend, yesterday, they had a Vision Pro that was on display. And I asked the owner, I was like, well, why'd you buy it? First of all, this guy is extraordinarily accomplished and wealthy, and he's not really thinking about like the cost per se, right? And he said, oh, it's pure novelty. It's like, I use it for 15 minutes now and then, and I'm done. And like, this is a party, we can pass it around. But that's it. I saw the Masters for a bit on the Vision Pro, but it was like a screen of the Masters that I could watch on TV. Although there was one interactive app which actually took you to the hole itself. You go like, oh, here's hole 18. And I was like, okay, that's a pretty cool experience in an immersive way.
Yeah, that's pretty cool. I do think that sports will be a big entertainment, right? Like the first row of an arena has such a markup in price. You can have a virtual reality view of a game that's like that. That's worth paying for in my mind, because if you watch sports and you're at home and you want to go to one. I looked at prices when I was out in LA on vacation. I wasn't going to get front row seat. I didn't even go to a game, but I was just curious as the price difference between the LA Lakers and like hometown Washington Wizards front row seats. Ooh, I mean, you could buy like 6-8 Apple Vision Pros for a pair of front row tickets for the Lakers.
So the people that put on the Vision Pro at this social event, what you start seeing them doing is they're like poking at the sky and doing stuff like this. And everyone's just kind of snickering.
That's weird.
It's really funny. Not really laughing at them. It's just kind of a funny thing. Like they really are in a different world. And sporting is social, right? People watch the Super Bowl together. So like the market for that entertainment is single men, I guess.
Yeah,
that have
probably a big demographic these days.
And early adopters, lonely single men that are sports enthusiasts and don't have friends to go have chicken wings and a beer on a Monday night.
Yeah, there's another industry that is usually an early adopter to technology that probably appeals to the same
Right.
group of single men.
Right, exactly. Right. There's overlap there. I mean, there's overlap, right? The early adopter crowd. Yeah, look, it's genuine. We'll see how it goes. Some other, quick highlights. We'll share this on the screen with everyone here, just from the Lumina Ledger. I won't go through all of these. You guys can subscribe and look for more. But there's an interesting piece here about how Warren Buffett is making mistakes, making a lot of mistakes recently.
While you walk through this, I'm going to check on my son who cut his hand cooking.
We talk about immigration, what that means for macro working age population, talk about the commodity cycle, and talk about what factors are working, and a little bit more on this concept of a vibe change that's been taking place in the markets ever since the last FOMC meeting. Headlines there: companies that benefit from inflation, like commodities, like energy, are outperforming, and firms that are negatively correlated to inflation, like biotech, small caps, underperforming. So, in fact, you can see today, small caps are down, right? So, when ultimately markets get past the higher for longer, those categories should do pretty well. And, we own small caps and all the rest, but we try to avoid inflation sensitive small caps or firms that are going to have issues refinancing their debt. So, yeah, it's a great newsletter, a lot in here every week. But the Buffett mistakes, I'll jump to that real quick. So one is he bought Taiwan Semiconductor and then sold it in a hot minute. Like 1 or 2 quarters later, had a PE of 15. At the same time, he held Apple, which had nearly the 32 PE ratio, Ford PE of 32, compared to Taiwan Semiconductor at 15. And Taiwan was semiconductor growing at a far faster rate than Apple. That was a big whiff. He started doing IPOs, investing in technology stocks like Snowflake. Snowflake got clobbered. Delta. So Buffett has this rule where he never invests in airlines. It's a great rule. I don't invest in airlines either because they have high fixed costs and low marginal costs. So you get in price competition quickly. Your incentive is to book the next seat because you get revenue off that. And the marginal cost of adding that seat is like $10. And think about the incremental fuel cost. So it's a brutal business. And, these companies have a lot of debt. So that was that. Apple, he didn't sell Apple earlier. He should have over the summer when earnings growth had come to a crawl. Looks like a sign of complacency. He owned a big chunk of Bank of America when they had these hold to maturity issues on their balance sheet. They've lagged. He should have owned JP Morgan. JP Morgan's outperformed Bank of America 15 points versus 10% per annum over the last 10 years. Significant outperform. He focused on quality. He finished the best bank in the land. And then Wells Fargo, he exited Wells Fargo due to the compliance issues and the CEO getting called in front of Congress. And of course, Wells Fargo's now at all-time high. So, yeah, he didn't really make a move during the banking crisis. The things he's doing well, though, he's long energy and home builders. That's where he's been scooping up new names. By the way, we're doing the same. I think he's actually on the right idea for both of those two themes. There's a housing shortage. We need more energy. So that's that.
Yeah, it was a good weekend read.
Awesome. Anything else?
Well, I think we talked, we indicated we were going to talk briefly about sleep hacks.
Oh, shoot. Yeah, let's get to sleep.
Yeah. I interviewed Molly Eastman of Sleep is a Skill. That podcast, I believe, will launch either this week or next week. Great interview, fascinating. A couple of tips, and I had a change in my routine as a result. So an important component that I didn't realize was consistency of your sleep cycle. So waking up the same time or relatively the same time every day and going to sleep every night around the same time. I, like probably most listeners here, have like a 5-day routine and then a weekend. And my 5-day routine is I wake up early, and that 5 a.m. wake up drives me. It hasn't launched yet. That 5 a.m. wake up forces me to go to bed 10 to 11. But on the weekends, I let myself sleep in. I thought, oh, that's probably the right thing to do.
What does sleep in mean for you? Like 6 a.m. or?
Yeah, I mean, truthfully, it probably doesn't mean much more than 6:30,
Okay.
7, maybe 7:30. But like I
Yeah.
turn off an alarm is my point, and I
Yeah.
just wake up when I wake up. And I thought I was doing the right thing for myself by giving myself an opportunity to get a little extra sleep on the weekends. But lo and behold, there's this concept. And Molly doesn't love the phrase. And I said, well, you'll have to come up with a better one. But until you do, I actually think this is an interesting phrase. It's called social jet lag. And at first, when I heard it, it didn't resonate. And then as we kind of discussed it, I was like, oh, that makes a lot of sense. So if you think about going from California to the East Coast, you're going to shift by 3 hours. And it's really hard when you come back. My whole sleep schedule was off for a week after I was in California for a week. And social jet lag is the same concept. So if you're waking up at whatever, pick your time, 5, and you go to bed at 10, 5 days a week, and then on Saturday or Friday night and Saturday night, you stay up until 12, 12:30, and then you wake up at 7:38, you think, oh, it's not that big of a deal. But really what you've now done is you've switched your sleep schedule by 3 time zones travel. You have this jet lag of you woke up 3 hours later. So now Sunday night, it's going to be harder for you to get to bed early. And then Monday morning when you wake up, it's going to be a difficult wake up. And I just hadn't really kind of like turned a phrase that encapsulated that idea. And so she encouraged me to set a consistent wake and sleep schedule. She said, if you can't change your bedtime or wake up time every day to 5, like maybe move it up. I won't get in my workout if I wake up later than 5 on a weekday because of like my kids and stuff. So I said, all right, I'm going to wake up at 5:30 on Saturday and Sunday, which I didn't love doing. It was just a habit. And then I had a great day on Saturday and Sunday, and I was like, oh, maybe I can do this. So that's like step 1 she does with her clients is she starts establishing a very consistent sleep and wake cycle 7 days a week.
I like it. I like it. So folks can take a look at that. It's on Spotify, YouTube. It'll drop in the next few days. So we have 2 podcasts. One's called Lumina Non-Consensus Investing. I lead that. It's around investment themes. And Justin leads one called Lumina Legacy, which is around health, wellness, longevity, how to live forever, biohacks. So take a look at that. I'm actually moving to the Justin Scout. I've been getting up at like 5 a.m. every day. I like it. I used to think of myself as a night owl. And if you do like a genetic test, there's some data that shows that I am like a night owl, but it turns out it doesn't really matter. I now wake up naturally at around 4:45, 5 a.m. I go to CrossFit at 5:30 a.m.
Let's go,
6 days a week, except Wednesday when I go to New York. It just doesn't fit in my schedule. The commute just doesn't work out. I did sleep in on Sunday, which meant that I woke up at 6:30 a.m., which is really funny. But by the way, like I'm sleeping better than I ever have, especially when I have small kids. It's like I'm actually getting up when they get up. And I never feel like I've got that sleep debt anymore.
Yeah.
And you get the workout done in the morning, you're off to a great start. You already accomplished something. You're starting the day with
winning the day already.
Winning the day. And I sleep well. They call it sleep latency, like time to sleep is much lower. I no longer have like insomnia issues or like racing thoughts before bed. And obviously I've cut out caffeine consumption after 12 o'clock too. I know the standard is earlier. It's like 11 or 10 if you really, but yeah, sleep is everything. If you have great sleep, you can move a mountain the next day.
No, it's the biggest up level you can do in your game for sure. Sleep well. It's ahead of, I would say, a lot of things. So anyway, super interesting interview and a lot of tips, a lot of insights. Excited.
Yeah, Molly's great. I mean, she's a professional sleep, like I guess therapist / advisor. She knows all the ins and outs. So you'll get a faster read than processing Matthew Walker's like 400-page book on sleep. So just listen to that.
She does reference Matthew Walker's book.
Okay.
He goes deep. I mean, he's an expert too. And Molly has the number 2 podcast on sleep. I don't know. I didn't bother to ask her who the number 1 was because I didn't really care, but maybe
That's amazing. There's a podcast on sleep, and a lot of people struggling and have issues, right? And
oh my goodness, the numbers are astounding.
And then they're having Dunkin' Donuts coffee. Well, I'm having Dunkin' Donuts coffee. I'm sure they're getting their own kind of
coffee.
It's good coffee, and maybe some pharmaceuticals. And you got to wonder like how many treatments and therapeutics people are taking because of just lack of sleep.
Yeah.
Just to cope with a lack of sleep. By the way, the other thing is I've been doing more of is sometimes I don't sleep well. So a few nights ago, my 1.5-year-old daughter, love her to pieces. She woke me up at 2 a.m., was wired, could not get back to bed. And then you have this game time decision at 5:30. It's like, okay, do you commit to the workout or do you just try to sleep? Because, the fatigue will come on if you just, it's like, I probably could fall asleep around here, but just go. Just got to go. Maintain the habit. And the studies also show that if you exercise on low sleep, it's better for you. It's better for the next night. It's better for staving off the issues that arise in your brain from lack of sleep also. And then just get like an afternoon nap. And you're good.
That's right. Well, the advice from her was probably don't nap. Also, interestingly, don't
nap as a general rule, regardless of circumstance.
She's just not a fan, I think. I think because it may interfere with the consistent cycle of sleep that she's looking to establish with her clients.
I see.
I think the other aspect that was interesting is after one of those nights, you might say, "Oh, I'm going to go to bed early the next night. So I'm going to catch up. I'm tired. I'm going to go to bed early." And she says, "No, stick to the schedule." Because again, that kind of becomes that jet lag issue when you go to sleep early and then you get maybe too much sleep, or you wake up earlier than you should have, and it just throws everything off. So go to the gym and stick to the schedule. Same thing for sleep. That was her recommendation. Stick to the schedule. So you have a bad night of sleep, don't go to bed early the next night. Go to bed at the normal time. Try to wake up around the same time every day. All these things are easier said than done, but the research backs that up.
A partner that can hold you accountable, other prompts and reminders and other things just to make sure it happens. But I'm the first one up in the household, so you just got to get up and go.
Exactly. I find that time of the morning to be the most peaceful when I'm the only one up.
Yeah, it is nice. It's a great space to have, and it's great. Well, shall we leave it there?
Let's do it. Great conversation, Rom.
Good stuff as always. So check out Justin's podcast dropping soon, Spotify, YouTube. Give it a follow. Lumina Legacy. All right. Take care, folks.
Right.
Make it a great week.